Hello, good afternoon. You're watching Closing Trades on ET Now. I'm Anisha Jain. With me is Nikunj Dalmia, and over the course of next 1 hour, we'll track how the closing of the week really happens, because for now, it's been a weak week per se for the market, and that's because the Nifty is tracking losses of almost 1%. Yes, there has been a bit of recovery on an intraday basis today, and we are holding on to 19,475 thereabouts. But nonetheless, the week gone by wasn't really strong for the bulls. What's happening today in terms of the various sectors and pulls and pushes for the market? Well, for the week, surprisingly, it's IT which has held down the strongest today as well. That's one of the top performing sectors, while it's the PSU banking names as well as realty which has been lagging. Talking about the PSU banking space, what took a knock today was SBI as well post its earnings. There's a miss of almost 1,000 crore when it comes to the NII of the bank, and the PPOP or the pre-provisioning operating profit is also lower than estimates, and that's impacting the sentiment on SBI. But the most curious cases of M&M today, they came out with their earnings, was good set of numbers, beat on all fronts, but then the stock is down. Why, you ask me? Well, the reason is that there's still no clarity as to why the company went ahead and invested into RBL Bank. Nikunj, they're talking about how they are looking at learning the banking business. That's why they've invested 400 crores. But still, we are not any the wiser than we were at the start of the day, right?
See, the management said we don't know, we can't share anything, but for that you don't do a lab experiment of 400 crores. Mahindra and Mahindra Financials in the past had applied for a banking license. If Mahindra and Mahindra in the past had applied for a banking license, it clearly meant that they understood the risk of the banking system years ago. And you're talking about the Mahindra group, which already runs an NBFC, and apart from the lot of basic CASA, and they understand the whole borrowing and the lending platform very smartly, and they use phenomenal technology across the group in terms of synergizing. So just to indicate that, look, we are not looking at increasing our stake, there is no strategic benefit, this is going to be something which is work in the progress, that is what I can share with you right now, is not something what markets were expecting, especially given that Mahindra and Mahindra stock has been re-rated in last 12 months, last 18 months because of two factors: SUV demand and great capital allocation. Each Mahindra group of company has really reinvented themselves in terms of capital allocation. So Mr. Shah referred to the fact that, look, our whole program on capital allocation does not change, but this is something which I don't know details of. 400 crores and could look at increasing the stake more, and if it is non-diversified, why? And that why is not something which anybody can answer very constructively right now. I don't want to whistle in the dark and say, okay, this is an indicator of this, is an indicator of that. No, my simple point is that 400 crores, if it is non-strategic, then it is treasury. If it is treasury, then it's fine. If it is non-treasury, then talk about it.
Yeah, the only thing that the market does not like is the ambiguity and the uncertainty, and that is exactly what's happening with M&M right now, and that's the reason that stock is under pressure. But nonetheless, why don't you take a call and listen into what Anisha is saying, and perhaps you will get a better understanding of what their outlook is on the RBL Bank investment.
This investment is really for us to understand banking in a lot more detail, with a very long-term view. This is a 7 to 10-year view. There are no assumptions on our part today whether we want to get into a bank or not. In fact, at this point in time, we cannot and we do not want to. There is no intention of going further beyond this at this point. But it helps us understand this sector a lot better to enhance the value of a business that is nearly a 40,000 crore market cap business in this sector for us. Why RBL Bank? We saw an opportunity with a bank that was very well run, a very strong management team, a very good foundation, at a price to book that was lower than 1. It was a great investment opportunity from that standpoint that came together with our desire to understand this sector in banking a lot more. And that is the reason we've gone ahead and taken a 3.53% stake in this bank.
Okay, that's what Anisha of M&M is saying, but let's just complete the point and get the view from Pashupati Advani as well. He's joining us on the show to talk the fundamentals of the market and stocks. Pashupati, hi, thank you so much for making time. What do you make of what you heard from Mr. Anisha and their investment in RBL Bank? Does it spook you about the capital allocation policies at the Mahindra Group at all?
No, this is like where there's smoke, there's always fire. So I think that they're planning something. I'm guessing that in the long term, they feel that there'll be restrictions on NBFCs, which may not be on banks. And so they want to kind of get cozy with one of them. This is a bank with no big promoter holding. So I think that this is an opportunity for them to step up at some point. And as Anish said, it may be 3-5 years or maybe the next cycle, but at least, they have that opportunity. They're there. 3.5% ain't going to give them a board seat. So I don't know what that means in terms of, putting money in, and 400 crores is a lot of learning. So, those are the two questions which even Nikunj mentioned a little while ago. So it's a little baffling, but, it is a bank that's out there that's probably up for grabs in the long term. Anisha?
Term plan is, but definitely in the short term it has left us puzzled. So let's see where M&M goes. But Nourish and Kunal, as always, are also joining us. Nourish, your view on the stock of SBI, because that took a bit of a knock post its earnings. What's your view? And secondly, LIC Housing, that's been consistently building gains. Of course, it's the second quarter of outperformance coming in from that company, and a good set of numbers.
So starting with SBI, the stock has again faltered at that 620, 630 mark, which was the high, say, for the last almost 6 to 12 months. And again, we are back to that 550 to 580 mark, which has been the other trading range. So for now, we've broken below that recent lows. We are almost breaking below the 580 lows, which were made for the month of July. So we again get back into this range of 555 to 620 on the higher band. So the hope of 620 breaking now again takes some more time to come. So for now, stock should remain range bound. It's only when it gets beyond 620 is a bigger trend which gets into play. For now, 555 would be the zone where you could expect, say, a buying opportunity. LIC Housing, on the other hand, the stock has been facing a lot of resistance around 420 to 430 mark. That was the high in 2022 as well as in 2023 at the start of the year. So would wait for 420, 430 to cross and then maybe have a look at it.
India Bull Housing yesterday, LIC Housing Finance today. Coincidence? India Bull Housing Finance yesterday, LIC Housing today. Just a coincidence? Or anything else which is specific to HFCs you can spot for us?
No, I think there's nothing specific to HFCs. In fact, most of the other HFCs, they're actually struggling, whether it's, I think, Chola Finance, Shriram Finance, Bajaj Finance, etc. These stocks have not shown any kind of a meaningful reversal or a breakout for themselves in the last couple of days specifically. So I think it's specific towards these two names which have been outliers or outperformers from the entire pack. Yes, I think LIC Housing Finance after today's move is, has confirmed a swing breakout on the charts, and that could probably be of an indication that this could reverse the medium-term major downtrend the stock had been struggling into. India Bulls Housing, I would still believe that it's a very high beta name. So even after this 20%, 25% up move in the last 1 week or so, I would still believe that it's a bit more risky to try and buy the stock at current levels. So I'll wait out for the trends to fizzle out for the stock and then see in the correction wave, if it happens, how far can the correction take the stock downwards to. If it falls back to 150 mark or say 145 levels, then we could probably expect that maybe that could be a point where the stock may come back into a demand zone. So as of now, would be a bit wary of buying India Bulls Housing.
SBI and State Bank of India, we are
disappointed by the weaker NII.
What is NII? Net interest income. Net interest income is actually a function of the income which you get through your lending and through a fees-based model. If the credit growth is strong, and if the credit growth was supposed to be strong, why is the net interest income lower? And if the additions to NPL are a tad higher on a lower base, is that a concern? My sense is that SBI has already been an underperformer. There were very little expectations. So a little bit of here and there may not really cause a stelling stampede in SBI, because SBI, it's a cheap stock. You cannot be that obsessed with looking at all quarter performance. 6-7 quarters, they've really managed to hit out of the park. And 1 quarter here, 1 quarter there, when interest rates are varying so much, is something which I think we should overlook. Profits are above estimates, provisioning is lower. The cost of deposit was supposed to go higher. As interest rates have gone higher, it would have impacted the yields. But this, I think, should not really disturb the market setup per se. Nourish, what's your sense on SBI on the charts? Because for this year, even though Bank Nifty hit a new all-time high, SBI did not participate.
So again, the same problem, 620 to 630, which was the high previously. We went very close to it a few sessions back. There was hope for a breakout, did not materialize post the numbers. Now we again get back to the range 555, 560 on the downside, 600, 620 on the upside. So would expect a range bound move, not expecting it to break below 555 as of now.
SBI from Pashupati as well. Pashupati, what is your view? What Nikunj is saying, just take a long-term view, because of course there has been a big correction in terms of how the bank's profitability has moved, or do you think this one quarter blip is something that the street might be worried about?
I think we have to fully agree with Nikunj. It is a long-term view with SBI. I don't think anyone really understands the SBI balance sheet properly because they've got so much stuff and it's really very difficult to analyze. So, I think you're taking it as India's big bank. It's too large to fail. They're just going to keep growing and they have access to rural deposits. So, I mean, those are the sort of tick marks that it gets. And as Nikunj says, it's underperforming because nobody understands the balance sheet properly. You look at it and then suddenly you have a little bit of a tweak that the NIMs are not good or the NIs are not good. But the reality is that, they control whatever they want to control. I mean, nobody knows the real truth, which has been the problem with SBI all along. But it's a good bank and it's a large market cap, so people are buying and holding it.
What could be the collateral damage for SBI because of poor numbers? It's not been like a ranked outperformer.
Yeah, but then I think SBI had its fair share of strong uptrend in 2021-22. Yes, 23, the stock has been an underperformer. We were discussing the percentage gains in the morning that the stock is down some 3.5%. Add to that today's price performance, and I think it should be down 5%, 6% so far on a YTD basis. But then when you look at 2022-21, the stock has been a very strong performer. It's managed to break past above, I think, years of resistance. I think 180 to 200 resistance for SBI was a huge resistance. So, it's a stock like SBI, it's a major large cap name. So you can't expect the stock to, give consistent returns or strong returns every now and then. The stock would probably get into a patch of consolidation. But I believe that if it in case corrects back towards 560 mark, say in this leg of uptrend, which is another 3%, 4% on the downside, that could actually be a very good territory to go for a contra on SBI.
Okay, let's listen in fact to the SBI management, because they are talking about how lending and deposit growth is likely to be 14 to 15% in FY24, and they've recovered 1,500 crores from their stress pool of almost 7,000 crore already. So at least the commentary is strong. Let's listen in to Mr. Khara.
Not necessarily the NPA. This is nothing but a reflection of some kind of a stress on the cash flow for this kind of a book, but we have invariably seen that a significant portion of SMA1 and SMA2 gets recovered and it becomes a performing. The broad trend which I indicated that out of 7,200 odd crores, 1,500 crore we have already recovered within a month of the account, the stress account. So that's the kind of a situation. When it comes to capital adequacy, the bank remains very well capitalized and we have sufficient headroom to take care of the normal various growth requirement. We have worked out that based upon the current capital adequacy, we are very well placed to support the further loan book growth to the extent of 7 trillion. Digital continues to be an important customer acquisition engine for the bank across the asset as well as the liability product. During the quarter, we have sourced 63% of savings bank account and 35% of retail asset accounts digitally through YONO. We have recently launched YONO for every Indian, in which customers of other banks can now.
Our subsidiaries have consistently performed well and continue to create significant value for all the stakeholders at Policybazaar.
Okay, so that's the SBI management saying that they're very well capitalized as of now to fuel the growth going forward, and that's why they're expecting a 14 to 15% growth going forward. What else is buzzing in the trading session? Well, of course, it's Zomato, which is up around 11 to 12%, Policybazaar 8% higher, and delivery ahead of its earnings is also quite excited. Pashupati, what's the top bet within the new age tech world?
For me, it's been the fourth one that you haven't mentioned, which is Paytm. So, but I was in and out and then it jumped above 800. Now it's in the high 700s. So I'm looking at entering again. But, I think that's the one with the winner because it seems to have ticked all the boxes. So I kind of like that one out of the four that you mentioned.
Paytm, which is the top bet coming in for Pashupati from the new age tech platform world. But it's time now to slip into a very short break. Don't go anywhere. Lots lined up when we come back.
Birla Fashion revenue 3,196, 3,200. Consolidated loss versus a PAT of 97 crore. Now, to give you a backdrop here, Aditya Birla Fashion is part of Aditya Birla Fashion Group. They've been on an acquisition binge of late. They've expanding, and they've really expanded themselves from luxury to innerwear. I think they've acquired TCS clothing in an all share swap deal. The stock on your screen, 218 rupees. Frankly, look at the couple of years of performance trend versus Aditya Birla Fashion. Just not gone anywhere. Actually, it'll be good to compare Arvind, Aditya Birla Fashion. My producer will fire some graphics. Trent and Raymond's. Yeah, let's do it. Trend. Today's change, let's look at some 1 year or 2 year time frame. It'll be better for us to establish the trend I'm trying to establish here. That's trend today, which has been in phenomenal outperformer. Without looking at the chart also, I can tell you that it's just been a phenomenal outperformer. Last 1 year, trend is up 30%. Raymond would have hit out of the park largely because of restructuring and real estate, and it's become a special situation stock. Arvind, the company which epitomized denim manufacturing in India, Arvind Fashions and then Arvind Limited, both of them frankly have done nothing. Arvind Fashion has all the fashion brands, Arvind Limited has all the basic manufacturing of denim in it. I don't think that stock's done very well also because of volatility in the cotton prices. That's Arvind Fashion for you. And then you got Aditya Birla Fashions. Such interesting, right? I mean, we're talking about urban spend, luxury spend, things going up. Raymond is the only one which has hit out of the park. Everything else is like just jumping in the same place.
Yeah, even I think Trent has done very well on a longer term basis. This year, ABFRL has been one of the biggest disappointing stock. I think 350 was the high in 2022 mid, I think July, August somewhere. And I think from there, the stock at one point had fallen to 180 or 185. That was a low for ABFRL. So right now, it's just a recovery. But then when you compare this with 2022 price performance, the stock is significantly low.
Pashupati? Indians are buying more cars, Indians are buying more luxury watches, Indians are buying more luxury shirts, Indians are buying more brands. But if I look at a company like Aditya Birla Fashion, well, this company does not report profits.
Well, I can understand some of that because, as you said, some people have they have made some acquisitions using stock, and some of those promoters may have actually lightened up and given stock in the market. And, I'm a great believer of supply and demand. So there must be a lot of supply in the stock. And not so much demand because it's not got any zing. I mean, it's not like on the top of the radar screen. It's there, but it does seem to be consolidating. It is buying high-end designers and making Pret out of them. So I think that's a trend that will probably it's a longer-term trend which they'll take time to monetize, I would say. And I think that it is probably a decent stock to look at to put away for a full cycle, as they get rural distribution. And the three big players, Jio, Aditya Birla and Tatas, are all buying these designers and putting them into their stables and then getting Pret out of them. So I think that trend is there to stay. Everyone is doing it, and it's a question of who does it best. And so far, it looks like Aditya Birla is running third in this race. So let's see what happens.
Aditya Birla Fashion, I know you liked it. But it must be something which, it is a company which has disappointed everybody, Nourish.
At some point of time, you give up on an idea. So the stock has been going in a downtrend for quite some time. Now the point is the results have been bad, but the price action does not seem as bad. The stock is available at the same prices where it was, say, even pre-COVID, the stock used to be, in January 20, it used to be 280 rupees. The stock is at 220 to 210 rupees now. So most of it is in the price. It's corrected from 360 down to 200, 220. Going forward, I would actually be watching out for it whenever it can cross 230. That would indicate the worst is over. For now, no reasons to believe the worst is over, but whenever the price crosses 230, that would be an indication the trend has changed.
Fair enough. Just wanted to look at a couple of other counters which are suddenly buzzing in the trading session. Of course, Info Edge, that's been higher by around 8%. You also have Castrol India, which is up 7%. We usually don't see a stock like Castrol actually move, and I'm not sure if it is moving on heavy volumes. But Kunal, any view on Castrol as well as Info Edge?
Well, not sure of Castrol because the stock is actually not an FNO, so there's no major FNO cues which are trending into the stock price. But then I think over the last 3 months or so, It's recovered from 115 or 112 was the low for Castrol to now 150 plus mark. It's still way off from its 2018-19 highs. I think 250 or 260, I remember was 2018 or 19 odd high for Castrol. So it's significantly off those highs. So would probably assume that this is just a short-term recovery and no major signs on the chart. So I'll probably give it a skip.
Okay, just some commentary coming in from Morgan Stanley on SBI, and they're calling Q1 NIM a big miss. They're maintaining the equal weight stance, giving the target which is still considerably higher than the current market price, but they are calling the Q1 a big NIM miss. The PAT is driven by non-core income, so they don't like the quality of earnings that they have seen, and the core PPOP has missed their estimates by a good 10%, and that's why we are perhaps seeing a bit of a disappointment on the stock. It's reeling further, seeing a cut of almost 2.5–3%, but the silver lining being that the asset quality remains quite strong. The CET1 ratio for them has improved sequentially to around 18%, so that's what the Morgan Stanley view is. Pashupati, the other space which has been coming back quite strongly throughout this year is the power theme, right? Whether it's the generating companies, NTPC, etc., transmission, power grid, or even the smart metering names, everything has seen quite a bit of bump up, and even the beaten down wind energy names as well. Would you be a buyer in any of these names?
Well, you have to, because at the end of it all, the government is driving power infrastructure from the front. They're spending money, and it does take time for the capex cycle to actually translate into real money. But while you're doing the capex, you're in it, and along with the government, some private players have also jumped in and followed. The consumption of power is going up. Price of power is also going up. I think everybody who's looked at an electricity bill recently, is the only word for it is ouch. So, because it's a necessity, and I don't think we can do without it. So they're kind of in the driver's seat right now. So yes, one does need to be, it is a sector worth looking at and worth buying a small piece of if you're constructing an Indian portfolio. And you see it in almost every FII and large mutual fund portfolio in India these days.
Now, what do we have? Well, we have Zomato, volume activity phenomenally higher. We've got Hindustan Copper, where the price performance this week has been phenomenally higher. And here's a quiz question. Who's ready for some quiz? If Policybazaar and Zomato are going higher, which is one company which would benefit the most?
Policybazaar
and Zomato are going higher. Quiz question.
Oh yeah, okay, the one that holds the holding company Info Edge, of course. What? No, but that's Zomato actually. They have holding in Zomato, sorry.
And Policybazaar both?
No.
Info Edge should go higher, let's see.
Yeah, it is. It is higher by 7%. Yeah? It is higher by 7%, yes.
Let's see, I haven't seen the stock. I have not seen the stock. I'm just assuming that how sometimes you can simply connect the dots here. The biggest holder of Zomato is actually Info Edge. That is through their, it's investment they have. And one of the biggest investors in PB Fintech is actually Info Edge. Where is Info Edge? On your screen, 4875. Pashupati Advani, the core business of Info Edge, which is Naukri, which is largely 50% plus on IT, is not doing well, but the investee companies are making a comeback. Is Info Edge a good buy now? Considering that the fintech promoters are now no longer the bad boys of the market, they've realized that, look, it's an auction market, they need to be profitable more. Growth to aa jayegi.
Well, I think Info Edge has been a stock that should be in every portfolio from 2,500 rupees. But yeah, I guess one could continue to add to it. I don't think you would jump into it with both feet, given that it's up 7% today. But I think that it is something that, as you said, benefits from these two big Hathi ownership that it has. And maybe they'll punt Naukri, because with Naukri, pivoting with AI and things like that, they may actually decide to sell it off or consolidate. That'll be interesting. So then they'll just be a holding company. So let's see. I mean, people are doing a lot of restructuring and trying to create value, and Info Edge has got a brain trust that is unrivaled. So that's good. Nikunj?
I literally had to use this phrase that if I put a gun to your head, which is one consumer fintech stock you would buy, and the guest on the show would respond by saying, please shoot me, but I will not buy a consumer tech and a fintech stock. Today, I don't have to put a gun to that head. I'm simply going to ask you this question without putting a gun to your head, Pashupati, which is one consumer or a fintech stock you would buy. There is no gun, so please feel free.
No,
so say no also.
I've been playing in and out of Paytm. So I'm still looking at Paytm as the mover for the market. So I think that that should be looked at. I would like it to be a little cheaper. It's not. It's come down a little bit from 800 plus. I think in the mid 700s is probably a good play. And that's, as I said, I'm in and out, and so I'm taking it as a trading stock as well. Nikunj?
Or to say that he will put a gun to my head if I don't ask him a question on consumer tech and fintech. So Nourish, don't worry. Which is a good consumer tech and a fintech stock to buy?
So I would be looking at, again, Zomato on dips or say Paytm, which has come down. So Paytm looks very interesting at these prices.
The gun is empty, then I'm not worried. Then I'm not worried at all.
I take the conversation back, and 6 months ago, and I also was not very convinced with what some of the consumers tech. I mean, I had a bullish view on Zomato, I'll admit it. I had a constructive view on Policybazaar, but I somehow did not have such a constructive view on Paytm, considering that the path to profitability for me, I think, was not very well defined. However, I still maintain that the MDR, what they have right now, the spreads are very high. Will it sustain? I don't have a convincing answer for that, but they have evolved very well. Zomato, my view was that it's a now duopoly, where Swiggy was going through a process of markdown, Zomato was going through a process of markups because the markdown had happened in 2022 for them. Swiggy happened in 2023. Policybazaar cash, the losses were largely ESOP driven. They had given you a guidance, and that class of 22 show, I mean, the management was absolutely clear that, look, this is where we are, this is where we'll go, and there was forced selling in the counter. But the bottom line here, Kunal, is that literally, and I mean, you've been part of ET now, we literally had to put a gun to our to the guest's head and say, and they would say, shoot us, we don't have an idea.
Yeah.
Now I don't have to put a gun.
Very true.
Right? So what do you want? Put a gun, or you'll answer a question without putting a gun?
If the gun is empty, then I'm not worried at all.
Russian ruler, you never know.
Okay, I think Pashupati wanted to say something to that.
All I said is we're 2 out of 5 wanting Paytm, so why not ride that Ghoda? And thanks, Nikunj, for your blessings to make it 2.5 or maybe 3 out of 5. Except you're not allowed to buy. So.
Yeah, no recommendations from our end, so don't consider any of those halves from our end. But nonetheless, what I do want to point out is Bharti Airtel, the con call is underway. They've managed to deliver an ARPU of around 200 rupees in the quarter gone by, and they're now targeting an ARPU of almost 300 rupees. And they're saying they do not have any plans to launch a phone like Jio Bharat because there was a bit of speculation around it. So Bharti Airtel is actually inching higher after that sort of commentary has come in, and they're also talking about the operating cost per site was lower in Q1 for the first time in history for them. So the cost metrics are also improving, and of course the business dynamics as well. I know, Nourish, we don't usually, anymore look at the telecom names Airtel or Vodafone in terms of investments, but anything on the charts that you want to flag out? And let's throw a Reliance as well, just for the sake of completing the argument with Jio.
So Bharti looks the most interesting. The previous high for the stock was 860. It gave a breakout, went to 900 plus, did a retest of 860, 870 band yesterday, and is now starting to reverse and is in touching distance of that 900 mark, which was the recent high. If it actually crosses 900, it would be a short-term breakout and could actually create a move all the way to 950 to 1000 also. So it looks very promising. The recent low becomes a stop loss and becomes a buy on dips from here on, and add on the way up about 900. So the best pick would be Bharti Airtel, and Reliance Industries continues to be sideways. Idea could be interesting because it has been making a base around 7.5, 8 levels. Multiple times it has reversed from those levels, but I would rather go with Bharti Airtel as the best bet.
That's a take coming in. Bharti Airtel remains the top pick from the telecom majors. But thank you, Pashupati, for joining us with that quick take and talking to us about the markets with gun or without gun, and talking to us about your top picks as well. But in terms of the markets, what's on the losing side is Navbharat Ventures. So that's taken a knock off 8%. JM Financials is on the back foot. Mahanagar Gas is also seeing a cut of almost 5%, and Cummins India had started on the back foot. There was a commentary and a con call as well that happened at 10, and post that there's a further dip which has happened on the counter. It's sitting with a cut of around 5%. So that was the take as far as how markets are panning out, but at least it's been a good recovery from the bottom of the day for Nifty as well as Sensex and Bank Nifty. We are now very close to that 19,500 mark. Time for a very quick break, but as we do that, listen into this conversation that my colleague Prakash had with the Power Minister.
By and large, there'll have to be we have set up a group which will oversee the whole thing. For each particular product, there has to be a standardization as to how many carbon credits will be given. So that is one thing which has to be done. And then there has to be rules which will say that, okay, the carbon credits can be sold or not sold outside the country. So these need to be put in place. Once that happens, then that issue of carbon credits will start. We've decided the major aspects about the the mechanisms which will oversee this carbon credit system.
You've also mentioned about that you are in discussion with some country for carbon credit export.
So we are in discussions with Japan on carbon credits. Yeah.
Moving ahead, sir, one issue that is with regard to market coupling. So what's the status now?
It's in process. We have said that market coupling should happen. It will happen.
We've got 20 minutes left and then we'll get the last rates for the week. Not a great week, but not a scary week. We saw a sharp turnaround and then a sharp recovery. Last 2 days, frankly, from where we were versus where we are right now, you close above 19,500, you go home with a lot of respect. That's what bulls would be saying. Thank you. You go above 19,500, you go with a lot of respect, and the promise the next week you'll play for the bounce again.
Yeah, because 2 days we've seen intraday recovery for the index, and I think that's what bulls look out for, because when there is intraday recovery, there is all the more hope that the market internals are not as bad, and when recoveries are bought into, or when corrections are bought into, that's actually a sign that the market participants are expecting that every level on the downside, 100 points, 200 points on the downside on the index, act as actually strong support. Now, but the bigger question is, and I think the trends which we should be ideally looking out for is, with every passing correction for the index and a possible start of a new trend, there are new sectors which tend to participate. We've seen that happening over the last 4 months. There was a phase where initially PSU bank stocks outperformed, their auto stocks outperformed, capital good had its fair share. So I think what we need to ideally look out for is that which are the sector trends which could shape up, assumingly if the index forms a bottom immediately, because that would probably determine the quantum of the rally or the uptrend which the index can see post that bottom formation.
Okay, come next week, actually the biggest talking point would be what RBI will do. Will there be that pause that continues? Will there be a pivot? What's happening there? That will be the big talking point, and I'm guessing the market will start taking cues from all of that as well. So yes, that remains important for the coming week, and of course it will be that last heavy week of earnings. So let's see how the fag end really pans out, because usually as the we reach towards the fag end of earnings, it's mostly the weaker names that really come out. So let's see how that pans out. But we are now joined by Vineet Bulinchka, the head of research at Ventura Securities as well. Vineet, hi, thank you so much for making time and speaking with us. Well, what's standing out to you in terms of earnings? We of course got M&M, SBI and a lot of other names as well recently. Anything that caught your attention?
So I think Zomato was a very strong number for us, and it firmly dispels all the naysayers away, and we believe that this stock can now really move up. So there is the path to profitability which has been established. Blinkit has been absorbed well, costs have been curtailed, rationalized, and we think that from here over the next couple of years, 50% growth on top line and sharp growth in bottom line is what we are forecasting going ahead.
Okay. What is the right way of looking at the right P multiple or the valuation for Zomato? I mean, what do you think is a deserving market cap? Because now it's almost 85-90,000 crore, north of about $10 billion. That's not cheap by any yardstick.
Yeah, so what we've done is we built out a DCF model, and as far as our numbers are concerned, we believe that a price of 140 in the next couple of years is what we are gunning for, or we are looking at a 50% upside from current levels.
The other thing, Vineet, which is happening in the market is entire this manufacturing vertical, and the fact that the government has now put import restrictions on laptops, tablets, etc. That's giving a bit of a pull up to the likes of Dixon, Amber, and the other manufacturing names, right from Kane, Serma, SGS, etc. Do you see more upside on these names, or they are getting a bit more toppish given the valuations?
I think the growth story is intact, but the valuations are a little demanding, little discounting. I would be a buyer on these stocks definitely, but at slightly lower levels or on 5 to 10% dips on these stocks.
Vineet, which is the other big consumer fintech which could go the Zomato way now? Because now there is a subtle not a subtle realization, but a sudden realization by market participants that these companies are here, they have a viable business model, and they are speaking the language of capital markets, not a private equity club.
So I think Paytm is the way to go. We are very, very bullish on Paytm. I had spotted this change in trend about a year ago, but the stock came down by half from the time we spotted it. But now it's back to the 800 levels, and I think this stock can rally very aggressively from here. And our target, my personal internal target on this stock is around 13 to 1400 rupees per share. Again, same, we are using the discounted cash flow method to value these stocks, and that's what we are looking at over the next couple of years.
Why has Mahindra Group picked up stake in RBL, and they're saying we don't know, but we're investing because we want to understand the financial sector and the risk and all the other factors associated with running a bank? I mean, by acquiring 3% stake, 400 crores of non-core investment, Vineet, what are they trying to do?
See, RBL is a very, very strong franchise. It has been turned around. And, my guess is that I think they are bailing out of Kotak Bank and taking money into this bank. That is my guess. Because, the Anand Mahindra was categorized as non-promoter in Kotak. And I think now they're putting money into this venture because you're getting a very well run and a very good franchise at very, very cheap valuations. So I guess they're doing that. And possibly the story going ahead would be that they would want to merge M&M Financial with RBL. That's my guess. There is no statement from anyone. But that would be the logical way to go, given the fact that you don't have 2 or 3 finance arm in the same company.
So I'm just trying to put 2 and 2 together here. Okay, let's assume that they eventually use RBL, increase their stake, and then merge Mahindra Finance into it, because they've been wanting to take Mahindra Finance to a level of a bank. So then, is Mahindra Finance a stock to buy? Is RBL a stock to buy? Or is Mahindra and Mahindra a stock to buy? Or none of them are a stock to buy?
No. RBL is definitely a stock to buy. So irrespective of Mahindra putting money into this stock, we had buy on this stock at 130 with a target of 260. Today we are sitting around 210, 220 odd levels. Still a way to go. And our estimates were very, very conservative. When we had spoken to the bank, they were very aggressive on our numbers, and they were of the opinion that we are being quite conservative. So we believe that now with Mahindra coming in, corporate governance is strengthened, and I believe that there could be a re-rating of the multiple of RBL Bank.
Okay, point taken. Let's take a look at the index itself, because that's seeing quite a bit of perk up, and the reason why Nifty is actually trending higher now is Reliance. Let's pull up the intraday chart of that one. That is contributing almost 30 points to the upside, so that's high by 1.25%. And the other one is HDFC Bank. It's been in a bit of a slumber of late, but today that stock is up 1.5%. 1653 is where the HDFC Bank stock is. Nourish, your view on Reliance and HDFC Bank?
So Reliance Industries, again, we are looking at the same prices acting as support. 2450, 2500 is a support. Going ahead, 2650 is a resistance. So bouncing from the important support areas. HDFC Bank similar, 1600, 1630 is a support where it is bouncing from. So today, the whole Nifty move can be contributed by this 2 heavyweights. So overall, bouncing from supports, but can we create a new trend? Too early to say. 2600, 2650 on Reliance Industries, 1700, 1730 on HDFC Bank. Those are the 2 price points, which is where a breakout takes place. So for now, still in the range, bouncing from the lower support areas.
Vineet, nothing wrong with SBI numbers, at least prima facie, little bit of cyclicality in NIMs, but brokerages, at least the global ones, have come out with knives and saying, okay, it's a miss, it's a miss, it's a miss. Do you think there is too much of scrutiny in one quarter here or there?
So I think the slippages were a little disconcerting. Slippages came more than we expected, but overall, I think the performance was very good. Provisioning was also slightly down. with the help of which they managed to grow the profit. So there could be a little bit of question mark going there in the eyes of these foreign brokers. But to my mind, I think at one time book, such a large franchise with very, very strong, subsidiaries doing so well, all compounding at 15 to 20%. I think this bank deserves to get re-rated and very, very sharply.
Edge is the real outperformer. Policybazaar, big investor. Zomato, big investor. And when I say big investor, I mean they are the largest shareholder. I should just check it out. I mean, I think they are the largest shareholder of Zomato.
Yeah, they should be, because I think they hold 30% plus stake, if I remember it right. Was it Info Edge? Was it that? Just give me 1 minute, I'll check that for you.
Even Policybazaar.
Because of course, I think with Zomato, the promoter or so-called, the Dipinder's holding is very, very low. So the other names that stand in terms of investment should be, Dipinder Gold is just 4.3%. Info Edge holds 13.93% stake.
They're the largest investor. They're the largest investor. Then you got, of course, Ant would be there. So apart from Ant, I think it would be right up. The Info Edge is actually higher than Ant. I just realized. And I think Policybazaar a similar number. Okay, Vineet, is it a good idea to simply buy Info Edge? You get an interplay into Zomato, you get an interplay into Policybazaar, you get an interplay into a tech recovery.
Absolutely. Absolutely. I second that. Thoroughly appreciate that idea.
Better than buying Zomato and Info Edge, just buy, better than buying Zomato and Policybazaar, buy Info Edge. I'm getting just jumbled up with all these new age tech names.
Yeah, but I am very, very gung ho on Zomato, because I believe that everything is ticking along quite nicely. Costs are in control. Top line growth, we are expecting 50% growth over the next 2 to 3 years. Bottom line coming out of the it will have a lot of tax shelters. So, I think there is a case to be made for a very strong up move. 140, 145 is my target on that stock. So I'm thinking of 50% upside. I don't think you'll get Info Edge with 50% upside.
Earnings impact on your screen, Edelweiss Financials, 45 rupees. Earnings impact on your screen, Mahindra and Mahindra not going anywhere. Earnings impact on your screen, TCI Express, which has been a phenomenal wealth creator. Actually, Nisha, we're discussing Raymonds and Escorts. Let's look at TCI Express. It's a spin-off from TCI. And if our producer could look at, let's say, the 5-year or even a 7-year, I don't think the spin-off is more than 5-7 years. But if you just look at the squeeze in 5 years, and what do we have on TCI Express? It's again been one of those, ranked outperformers, almost a 3.5x stock. So Vineet, we were discussing how Raymonds has been a multi-bagger in last 5 years, how Escorts has been a breathtaking mover in last 10 years. Which is the next big one now?
I think Escorts has got a lot of steam left. I think it's going to move up very, very sharply.
It cannot give you the same percentage return. So in that same percentage returns, like high return probability basket or a possibility basket 5 years out, this could be a trend in making, and this could be a stock if they deliver, and if the tailwind continues, the business could head out of the park or the stock could head out of the park. What falls in that criteria for you?
I think Welspun India is one stock which is out of the radar for everybody. And I think that stock has the potential to do exceedingly well over the next 5 years. My reasoning being that the home textile business has got back its margins again. If you see their B2C business is clocking along quite nicely. Towels, bed linen, as well as their wooden flooring business is coming along very well. Their capex cycle is over. We are going to expect margins going to between 10 to 15%, EBITDA from zero as of now. And the way their B2C platform is building up in the consumer discretionary space, I think there could be a very, very sharp re-rating on this stock. Not to forget, that they would also be debt-free by then.
BDST ideas, let's take them, starting with Nourish. Nourish, 5 minutes left. What's the trade for buy today, or sell today, or buy on Monday, or vice versa?
So first would be a buy on Bharti Airtel, which has seen a good bounce from the lows. Stop loss at 885, target of 920. Second would be a buy on Bandhan Bank, showing a lot of relative strength for the last two sessions. Stop loss at 226 and a target price of 235.
Kunal, what about you? What's the BTSC or STBT trade?
So BTSC stocks, first is about Voltas. We discussed this yesterday, in fact today morning as well. Stock showing strength, so would maintain the target of 830. Traders could look at a trailing stop loss of 805 if someone's taking position at current levels. And Federal Bank is something which has also managed to be a bit more resilient on the fall today. So I would believe that this could probably be a case of a breakout for Federal Bank. Targets of 140, stop loss at 130.
Jubilant Food, that one is seeing quite a bit of spikes. That's higher by 5%. Of course, numbers for Devyani were out on the intraday basis from the QSR space. But it's Jubilant Foodworks which is doing quite okay. On the losing side, you of course had Aditya Birla Fashions, which is reacting negatively to the earnings. We were flagging it out earlier as well, but now it's taken a slide of almost 7%. So should take stock of what's happening on that one. And then Mahanagar Gas has been on the back foot from the start of the trading session itself. Vineet, from the QSR space, Jubilant Food or even Devyani and Sapphire for that matter, do you like any of the names?
Devyani by a wide margin, given the corporate governance, the way Varun Beverages is run, we believe that the same thing can rub off on Devyani, and to my mind, this stock is got a 30 to 40% upside for fair value.
So which is the best play on QSR then? Is it Westlife, Burger, Sapphire, Devyani, Zomato, or Simple?
I go with Devyani because you've got a diversified franchise base. You've got different brands. It's run very well. It's an efficient machine, and they've got a very, very good run rate of putting out new stores. So I'll go with Devyani.
4 minutes to go, and then the earnings impact on CAMS. It's just been a stock when it went public, nobody bothered, and the number of demat accounts are getting added just on a regular basis. It is so amazing to see that. I want to look at some brokerage stocks here and some AMC stocks here. I mean, we are talking about bull market, SIPs, brokerage, demat accounts, but regulatory, so much is changing in that space that HDFC AMC, frankly, nowhere close to its 52-week high. UTI AMC, nowhere close to its 52-week high. All that buzz of them selling the stake and sponsors selling the stake, nothing's gone through. We did a story that the Birla Group and the Tata Group were interested in bidding for it, and I don't know what happened after that. That deal has just, I think, fallen on the wayside. Aditya Birla Financials, Aditya Birla AMC, nowhere close to its public listed price when it went public. I think it was 600 plus. And Reliance Nippon, again done nothing. Similarly, in that same vein, Motilal Oswal Securities, you look at Angel, the brokerage stocks typically, I don't think they are the ones where a lot of wealth has got created. And Vineet, this is like the biggest irony, right? SIPs are strong, brokerage is strong, demat is strong, but
SEBI is also strong. So SEBI has come in and spoiled the party for all these franchises. They've tightened the noose, taken de-risking measures, which are very, very tight, enhance working capital, cut back on trails. And, I think they're hurting because of that. But I think I would give it 6-8 months before the poison in the stock settles, and then they would resume their upward journey.
1 minute left for the closing, sir. Sharp answer on the Cipla Blackstone deal which is brewing. Do you think there is some reality to that?
I wouldn't want to wager on speculation.
Okay, not wagering on speculation, but this week has been all about the bears taking control because it's the second straight week that the Nifty is going home with a red tail. You had the mid-cap index